Hi friends, today we are going to discuss direct tax in that income of other person included in assessor's total income. So income of other person included in assessor's total income. Nothing but clubbing of income. Okay. So here other person means spouse, children and son's wife. Okay, minor children. Okay, first we will see one example. See, Mr. Kalyan, aged 45 years, resident. So Mr. Kalyan assessee, so he has to pay tax. And next he marry Kalyani. So here Kalyani does not earn any income. Okay. So here income of Mr. Kalyan previous year 2019-20, income from salary 5 lakhs, house property 3 lakhs. So total income 8 lakhs. So salary income and house property income already computed. So here computed means already adjusted, everything deductions, something, everything adjusted. So final amount 5 lakhs, 3 lakhs. So this is question. See solution. So tax liability assessment year 2021. So total income 8 lakhs. So here assessee age 45 years. So 0 to 2.5 lakhs nil. And next 2.5 lakhs 12,500. Okay. And next remaining 3 lakhs 60,000. $72,500. So add cess 4%, 2,900. So 75,400 total tax liability. Okay. So here Kalyan thinking over smartness. So he transfer house property to his wife Kalyani for inadequate consideration. So now see Kalyan tax liability and Kalyani tax liability. So here total income of Kalyan from salaries, income from salaries 5 lakhs. So here house property income 3 lakhs. So computing tax liability 0 to 2.5 nil. And next to 2.5 lakhs 12,500. So here Kalyan income up to 5 lakhs only. So he can avail rebate. 100% of tax liability or 12,500, whichever is lower. So here tax liability 12,500 into 100% 12,500 and 12,500. So whichever is lower 12,500. So two are same, no? So 12,500. So less rebate 12,500. So because of this, no need to pay tax. And here see, up to 2.5 nil. And next remaining 50,000, 2,500. So here also rebate, less rebate 2,500. So tax payable nil. So earlier people using this if they have house property earning income from that house. So to avoid this, Income Tax Act brings sections. Now we will see those sections, okay? See, section 60. So in this chapter, remember sections also. In section 60, income transferred without transfer of asset. See, for example, Mr. A transferred house property to Mrs. A. So, Mrs. A, for inadequate consideration, Mr. A transferred. So, here Mrs. A given that house to rent. So, this rent income of Mrs. A will be clubbed in Mr. A. And also if there is any benefits from this house property will also included in Mr. A's income, like standard deductions. So that will cover in income from house property chapter. Okay. See, and Mr. A deposit, fixed deposit in the name of Mrs. A. So if any interest from this deposit also included in Mr. A's income. See, and next, see illustration 1. Mr. Vastan has transferred through a duly registered document the income arising from a garden to his son without transferring the garden. In whose hands will the rental income from garden be charged? According to section 60, expressly states that where there is a transfer of income from an asset without transfer of the asset itself, such income shall be included in the total income of the transferor. Okay? Hence, the rental income derived from the garden shall be clubbed in the hands of Mr. Vastan. Okay? See, and next section 61. See, income arising from revocable transfer of asset. Revocable means cancelable transfer of asset. Then the income from such property shall be clubbed in the income of transferor. Okay. And next section 64(1) class 2. So in this section, income arising to spouse by way of remuneration means a salary. So any income arising to spouse by way of remuneration from a firm or company in which the individual has substantial interest. See, substantial interest means in case company holding 20% or more shares. So 20% or more shares or voting rights. Either by himself or relative. Himself or relative. See, for example, Mr. A holding 18% shares in ABC company and his relative, Mr. A's relative, holding 2% shares in ABC company. So total 20% shares in case of company. So in other cases, 20% or more profits receivable from such company or firm, either by himself or relative. Okay, himself or relative. See, for example, A receiving 15% of profits and relative receiving 6% of profits. To total 21% of profits. Okay. See, for example, ABC company. So in that, Mr. A holds 25% of shares or more voting powers. So 25% shares or voting powers Mr. A holds in ABC company. In that company, Mrs. A working as manager. So the income of Mrs. A clubbed in the hands of Mr. A. Okay. But this section gives some relief to spouse. Clubbing provisions will not apply if spouse receives remuneration on the basis of technical and professional qualification. Technical and professional qualification. So they need not to include. So clubbing provisions will not apply if spouse earn income on the basis of technical and professional qualification. So next, if both husband and wife has substantial interest in the firm, the clubbing provision will apply to the spouse who has greater total income, excluding income from such firm or company concerned. So here spouse means husband or wife. See, in ABC company, both wife and husband has substantial interest. So Mr. A income, that is husband income, 1000 rupees, and Mrs. A's income 500. This income before receiving the income from this company. So here Mr. A income is higher. So if any income arising Mrs. A from this company, that will include in this income. That means clubbed Mr. A's hands. If Mrs. A income higher and Mr. A income lower, then clubbing the Mr. A income in Mrs. A. Okay? See illustration 2. Mr. A holds shares carrying 25% voting power in X Limited. Mrs. A is working as a computer software program in X Limited at a salary of 30,000 per month. She is, however, not qualified for the job. The other income of Mr. A and Mrs. A are 7 lakhs and 4 lakhs respectively. Compute the gross total income of Mr. A and Mrs. A for the assessment year 2021. See here. Mr. A holds shares carrying 25% voting power in X Limited, that is a substantial interest in the company. His wife is working in the same company without any professional qualification for the same. Thus, by virtue of the clubbing provisions of the Act, the salary received by Mrs. A from X Limited will be clubbed in the hands of Mr. A. Okay? Salary received by Mrs. A 30,000 per month. So, per annum 3,60,000. So, here less standard deduction. Under section 16, subsection 1A, 50,000. This point will cover in income from salaries chapter. Okay? So, 3,10,000. So other income 7 lakhs. So gross total income 10 lakhs 10,000. Okay. And the gross total income of Mrs. A 4 lakhs. That is other income. Okay. See illustration 3. Will your answer be different if Mrs. A was qualified for the job? If Mrs. A possesses professional qualification for the job, then the clubbing provision shall not be applicable. Okay. Gross total income of Mr. A 7 lakhs other income, and gross total income of Mrs. A salary received by Mrs. A 30,000 into 12 less standard deduction 50,000 being the standard deduction under section 16 subsection 1A plus other income 4 lakhs. So here total 7 lakhs 10,000 gross total income of Mrs. A. Okay. See illustration 4. Mr. B holds shares carrying 30% of voting power in Y Limited. Mrs. B is working as accountant in Y Limited, getting income under the head salary. Computed. So rupees 3,44,000 without any qualification in accountancy. Mr. B also receives 30,000 as interest on securities. Mrs. B owns a house property which she has let out. Rent received from tenants 6,000 per month. Compute gross total income of Mr. B and Mrs. B for the assessment year 2021. So here, since Mrs. B is not professionally qualified for the job, the clubbing provision shall be applicable. So income under the head salary, Mrs. B computed 3,44,000 and income from other sources, that is interest on securities 30,000. So total gross total income of Mr. B 3,74,000. Okay. Mr. B gross total income 3,74,000. Okay, next Mrs. B gross total income. Income from salary clubbed in the hands of Mr. B. So nil. And income from house property gross annual value 6,000 into 12. 6,000 per month, no? So 72,000. Less municipal taxes paid. There is no municipal taxes. Okay. Net annual value 72,000. Less deduction under section 24. 30% of NAV. That is net annual value. So 21,600. And interest on loan. There is no interest on loan. Okay. 50,400. So gross total income of Mrs. B 50,400. Okay. See next section 64 1 class 4. It is very important. See, income arising to the spouse from asset transferred without adequate consideration. See in that Mr. A, for example, Mr. A transferred house property to Mrs. A. So here Mr. A transferor and Mrs. A transferee. So this section says Mr. A transfer asset, that means house property. Even though transfer of asset, Mr. A transferor will be deemed owner. The transfer house property. Okay. And next, for example, Mr. A and Mrs. A both wife and husband, but they are not living together. There may be some issues, they divided. Mr. A, Mrs. A. So after divide, Mr. A transfer house property to Mrs. A. So any income arise from this house property, then clubbing provision will not apply. So here transfer other than house property. transfer asset other than house property. If they are living together, then clubbing provision will apply. And next, Mr. A transferred 50 lakhs Mrs. A. So, Mrs. A deposit at the rate of 10%. So, 55 lakhs. After maturity, this 5 lakhs interest clubbed in the hands of Mr. A. And again Mrs. A, these 5 lakhs deposited at the rate of 10%. So that is 50,000 interest. So this amount does not club in the hands of Mr. A. This is an recreational income. Okay. 1, 2 and 3. See next fourth one. When transferred asset. When transferred money is invested in business, then proportion has to be clubbed in transferor's income. See, there is a formula for proportion to include in transferor. See, profit on capital contribution into amount invested in the firm on first day of previous year. So that is gift funded only, divided by total investment by the transferee on the first day of previous year. Here own amount plus gift fund. From this concept there is an illustration, we will see that. Okay. See, and next, see illustration 5. Mr. Vaibhav started a proprietary business on 1/4/2018 with a capital of 5 lakhs. He incurred a loss of 2 lakhs during the year 2018-19. To overcome the financial position, his wife Mrs. Vaishali, a software engineer, gave a gift of 5 lakhs on 1/4/2019, which was immediately invested in the business by Mr. Vaibhav. He earned a profit of 4 lakhs during the year 2019-20. Compute the amount to be clubbed in the hands of Mrs. Vaishali for the assessment year 2021. If Mrs. Vaishali gave the said amount as loan, what would be the amount to be clubbed? See here, according to section 64 subsection 1 class 4 of the Income Tax Act 1961 provides the clubbing of income in the hands of the individual. If the income earned is from the assets other than house property, transferred directly or indirectly to the spouse of the individual, otherwise than for adequate consideration or in connection with the agreement to live apart. In this case, Mr. Vaibhav received a gift of 5 lakhs on 1/4/2019 from his wife, Mrs. Vaishali, which he invested in the business immediately. The income to be clubbed in the hands of Mrs. Vaishali for the assessment year 2021 is computed as under. See here, capital as on 1/4/2019. So, here capital of 5 lakhs, in that incurred 2 lakhs. So, remaining 3 lakhs. And capital contribution out of gift from Mrs. Vaishali 5 lakhs. So, total capital as on 1/4/2019 8 lakhs. So, next he invested these 8 lakhs in a business. See here, on 1/4/2019, which was immediately invested in the business by Mr. Vaibhav. He earned a profit of 4 lakhs. Okay. Profit for previous year 2019-20 to be apportioned on the basis of capital employed on the first day of the previous year, that is as on 1/4/2019. So here total profit 4 lakhs apportioned on the basis of capital. Okay. So 4 lakhs into 3 lakhs divided by 8 lakhs. So 1,50,000 profit for Mr. Vaibhav and remaining 2,50,000 Mrs. Vaishali. Okay. Therefore, the income to be clubbed in the hands of Mrs. Vaishali for the assessment year 2021 is 2,50,000. Okay. See, another question here. If Mrs. Vaishali gave the said amount as loan, what would be the amount to be clubbed? See, in case Mrs. Vaishali gave the said amount of 5 lakhs as bona fide loan, then clubbing provision would not be attracted. The provision of section 56(2) subsection 8x would not be attracted in the hands of Mr. Weber, since he has received a sum of money exceeding 50,000 without consideration from a relative, that is his wife. Okay. See, question number 4. A proprietary business was started by Srimati Rani in the year 2017. As on 1/4/2018, her capital in business was 3 lakhs. Her husband gifted 2 lakhs on 10/4/2018. Such sum is invested by Srimati Rani in her business on the same date. Srimati Rani earned profits from her proprietary business for the financial year 2018-19, 1,50,000, and financial year 2019-20, 3,90,000. Compute the income to be clubbed in the hands of Rani's husband for the assessment year 2021 with reasons. See here. Her husband gifted 2 lakhs on 10/4/2019. So, as earlier, what the formula we discussed is profit on capital contribution into amount invested in the firm on first day of previous year. First day of previous year. Remember, first day of previous year divided by total investment by the transferee on the first day of previous year. Okay. That's why here capital asset 1/4/2018, investment on 10/4/2018 out of gift received from her husband 3 lakhs and capital contribution out of gift from her husband 2 lakhs. So total 5 lakhs. Profit for the financial year 2018-19 to be apportioned on the basis of capital employed on the first day of the previous year. First day of the previous year, that is 1/4/2018. So here 3 lakhs and 1,50,000. See here, financial year profit from the proprietary business for the financial year 1,50,000 not to be shared to husband because her husband gifted 2 lakhs on 10/4/2018. So here not to be clubbed her husband income. See, capital employees asset 1/4/2019, Srimati Rani's capital contribution 4,50,000 and capital contribution out of gift from her husband 2 lakhs. So total 6,50,000. And next 1/4/2019 profits of the financial year, see, 3,90,000. 2019-20. So in this 3,90,000, there is an apportion to husband. So in the ratio of 45:20, capital employed as at 1/4/2019. Okay. Remember, in the formula, amount invested in the firm on first day of previous year only consider. That is gift fund amount only. Okay. So therefore the income to be clubbed in the hands of Srimati Rani's husband for assessment year 2021, that is 1,20,000. Okay. See, and next section 64(1)(7). See, in this section, Mr. A transfer house property to any person or AOP. House property. See, for example, Mr. A transfer house property to the company. So, here company pays rent. Mr. A said to the company, pay rent to the Mrs. A. Mrs. A. Even though rent paid to Mrs. A, but it is clubbed in the hands of Mr. A only. Okay. See, and next section 64(1)(6). See here, father-in-law or mother-in-law transferred house to his son's wife. Son's wife without adequate consideration. So here the house property transferred after marriage. So any income arise from that asset transfer should be clubbed in the hands of the transferor. If father-in-law transferred, in father-in-law's income, or mother-in-law transferred, then mother-in-law's income. Okay. If money transferred, then that money invested in a business. There any income arise, then proportion to be included in transferor. Same formula as earlier we discussed. See, on the basis of this formula, the proportion income clubbed. Okay. See, question number 3. Mr. A has gifted a house property valued 50 lakhs to his wife, Mrs. B, who in turn has gifted the same to Mrs. C, their daughter-in-law. The house was let out at 25,000 per month throughout the year. Compute the total income of Mr. A and Mrs. C. And will your answer be different if the said property was gifted to his son, husband of Mrs. C? See here. So here Mr. A has gifted house property valued 50 lakhs to his wife. So without consideration. So inadequate consideration. That is free of cost. And then Mrs. B in return gifted the same to Mrs. C. Here also inadequate consideration. So the house was let out for 25,000 per month. So 25,000 into 12, 3 lakhs. So in that 30% according to 27 section. So 3 lakhs into 30%, 90,000. By deducting 3 lakhs minus 90,000, so 2,10,000 will be clubbed in the hands of Mr. A. Okay. Who transferred the house property? Mr. A. Transferor. And will your answer be different if the said property was gifted to his son? Yes. Here the son is not minor. So the income not to be clubbed in the hands of Mr. A if the house was transferred to his son. Okay. See, and next section 64(1)(8). So in this section, these two compare. Here Mrs. A receiving the rent. Here son's wife receiving the benefit. So in both cases, income will be clubbed to the income of the transferor. So in this case, transferor, father-in-law or mother-in-law. So in this case, Mr. A. So, husband of Mrs. A. See illustration 6. Mrs. Kasturi transferred her immovable property to ABC Company Limited subject to a condition that out of rental income, a sum of 36,000 per annum shall be utilized for the benefit of her son's wife. Mrs. Kasturi claims that the amount of 36,000 utilized by her son's wife should not be included in her total income as she no longer owned the property. Examine with reasons whether the contention of Mrs. Kasturi is valid in law. The clubbing provisions under Section 64(1)(8) are attracted in case of transfer of any asset directly or indirectly, otherwise than for adequate consideration, to any person to the extent to which the income from such asset is for the immediate or deferred benefits of son's wife. Such income shall be included in computing the total income of the transferor individual. Therefore, income of 36,000 meant for the benefit of daughter-in-law is chargeable to tax in the hands of transferor, that is Mrs. Kasturi in this case. Okay, the contention of Mrs. Kasturi is hence not valid in law. See, there is a note here. In order to attract the clubbing provision under Section 64(1)(8), the transfer should be otherwise than for adequate consideration. In this case, it is presumed that the transfer is otherwise than for adequate consideration, and therefore the clubbing provisions are attracted. Moreover, the provision of Section 56(2)(x) will also get attracted in the hands of ABC Company Limited if stamp duty value exceeds 50,000 and if the conditions specified thereunder are satisfied. Okay? He presumed that the transfer is otherwise than for adequate consideration. Then clubbing provision attracted. So here, second case, if it is presumed that the transfer was for adequate consideration, the provision of Section 64(1)(8) would not be attracted. Okay? Here, they presumed in two cases. Presumed that the transfer is otherwise than for adequate consideration and presumed that the transfer was for adequate consideration. If transfer is otherwise than for adequate consideration, then clubbing provisions are not attracted. Clubbing provisions are attracted. And if presumed that the transfer was for adequate consideration, then clubbing provision not attracted. Okay? See, and next section 64(1)(a). So in this case, Mr. A and Mrs. A having daughter B. So they give her 10,000 per month. B saves 5,000 per month. So she is saving total 60,000 per annum. She is deposited in a bank at the rate of 10%. So 6,000 per annum interest. This income should be clubbed in the hands of Mr. A or Mrs. A, whose income is higher. If once added to a particular parent, then subsequent years also added that particular parent only, irrespective of higher incomes. Okay? And in next case, in case of divorce, parents who is maintaining custody of child is liable to pay tax. Okay? See, if minor child earn income by way of manual work or by way of skill, talent, specialized knowledge, experience, and if minor child suffering disability of specified under Section 80U, from this any income arise should not be clubbed in the hands of the parents. Okay? And in Section 10, Subsection 32, there is an exemption up to 1,500 per annum per minor child is given to the parent. Okay? See question 1. Mr. Sharma has 4 children consisting 2 daughters and 2 sons. The annual income of 2 daughters were 9,000 and 4,500 and of sons were 6,200 and 4,300 respectively. So here the daughter who has income of 4,500 was suffering from a disability specified under Section 80U. Compute the amount of income earned by minor child to be clubbed in the hands of Mr. Sharma. So here, minor child suffering from disability specified under Section 80U would not be clubbed in the income of parent. Okay. So here, the annual income of two daughters were 9,000 and 4,500. So 4,500 not to be clubbed. See, and the remaining income of one daughter 9,000. So here there is exemption 1,500. So 7,500. And income of two sons 6,200, 4,300. So and next exemption 1,500 plus 1,500 3,000. So total 7,500. Total income to be clubbed as per section 64 1A 15,000 in the hands of Mr. Sharma. Okay. See question number 2. During the previous year 2019-20, the following transactions occurred in respect of Mr. A. Mr. A had a fixed deposit of 5 lakhs in Bank of India. He instructed the bank to credit the interest on the deposit at the rate of 9% from 1/4/2019 to 31/3/2020 to the saving bank account of Mr. B, son of his brother, to help him in his education. Mr. A holds 75% profit share in a partnership firm. Mrs. A received a commission of 25,000 from the firm for promoting the sales of the firm. Mrs. A possesses no technical or professional qualification. Mr. A gifted a flat to Mrs. A on April 1, 2019 during the previous year 2019-20. Mrs. A's income from house property was 52,000 from such flat. Mr. A gifted 2 lakhs to his minor son who has invested the same in a business and he derived income of 20,000 from the investment. Mr. A's minor son derived an income 20,000 through a business activity involving application of his skill and talent. During the year, Mr. A got a monthly pension 10,000. So here, he had no other income. Mrs. A received salary 20,000 per month from a part-time job. Examine the tax implications of each transaction and compute the total income of Mr. A, Mrs. A and their minor child. See here. So income under the head salaries. Here salary income of Mrs. A 2,40,000. Okay. And next pension income of Mr. A 10,000 into 12, 1,20,000. So there is a standard deduction 50,000. So by deducting the 70,000, 1,90,000. Okay. Next income from house property. So see here note. According to section 27(1), an individual who transfer any house property to his or her spouse otherwise than for adequate consideration or in connection with an agreement to live apart shall be deemed to be the owner of the house property. So transferred. Hence, Mr. A shall be deemed to be owner of the flat gifted. Okay. Mrs. A and hence the income arising from the same shall be computed in the hands of Mr. A. Mr. A shall be deemed to be owner of the flat gifted to Mrs. A. Okay. See note, the provision of section 56(2)(x) would not be attracted in the hands of Mrs. A since she has received immovable property without consideration from a relative, that is her husband. So here income from house property 52,000. See here. Mr. A gifted a flat Mrs. A on April 1, 2019 during the previous year 2019-20. Mrs. A's income from house property computed 52,000 from such flat. Okay. Next, income from other sources. Interest on Mr. A's fixed deposit with a Bank of India, 5 lakhs into 9 percentage, 45,000. See note 1. As per section 60, in case there is a transfer of income without transfer of asset from which such income is derived, such income shall be treated as income of the transferor. Therefore, the fixed deposit interest of 45,000 transferred by Mr. A to Mr. B shall be included in the total income of Mr. A. And next, commission received by Mrs. A from a partnership firm in which Mr. A substantial interest. See, I already discussed how to calculate substantial interest. Read this note once and answer. Okay. Next, income before including minor son and section 64 1A, 1,92,000, 1,90,000. Mr. A 1,92,000, Mrs. A 1,90,000. So see here, which income is higher? Mr. A. So minor child income included in the Mr. A's income. So income of minor son from the investment made in the business out of the amount gifted by Mr. A, 18,500. And income of the minor son through a business activity involving application of skill and talent. So if any income arises to a minor child from his skill and talent, then need not to be clubbed. Okay. Total income 2,10,500 of Mr. A and 1,19,000 of Mrs. A and 20,000 of minor child. Okay. See here, MCQ number 1. Income of a minor child suffering from any disability of the nature specified in section 80U. See option A, to be assessed in the hands of the minor child only. So option A is correct. Okay. See MCQ number 5. Exemption of a certain amount not exceeding the income clubbed is available under section 10 subsection 32, where a minor's income is clubbed with the income of the parent. The maximum exemption available is up to 1,500 in respect of each minor child. Okay. Option A is correct. See here, income arising to a minor married daughter. So even though any income arising after marriage of minor daughter, that income included in the father income, that is to be clubbed with the income of that parent whose total income before including minor's income is higher. See option B, correct. Okay. See MCQ number 7. Scholarship to meet the cost of education received by a minor child is option A, to be assessed in the hands of the minor child, and option B, to be clubbed with the income of that parent whose total income before including minor's income is higher, and option C, completely exempt from tax. So option C is correct answer. Okay. See MCQ number 8. Income of a minor child from a fixed deposit with a bank made out of income earned from scholarship is, see here, to be assessed in the hands of minor child, to be clubbed with the income of that parent whose total income before including minor's income is higher. See here, option B is correct. Okay. See here, MCQ number 10. Interest from a fixed deposit received by a minor married daughter is, option A, to be assessed in the hands of minor child, to be clubbed with the income of that parent whose total income before including minor's income is higher. See here, option B is correct. Okay. See illustration 7. Mr. A has 3 minor children, 2 twin daughters and 1 son. Income of the twin daughters is 2,000 per annum. 2,000 per annum each. Okay. And that of the son is 1,200 per annum. Compute the income in respect of minor child to be clubbed in the hands of Mr. A. See here, taxable income in respect of minor children. in the hands of Mr. A is two twin minor daughters. So here the income of twin minor daughters is 2000 per annum each. So 2000 into 2 4000 and less exempt under section 10 subsection 32 1500 per children. So 1500 into 2 3000. So 1000. Minor son, income of minor son 1200 per annum. So here less exemption, up to 1500 exemption no. So here total 1200 will get exemption. So nil. Income to be clubbed in the hands of Mr. A 1000. Okay. See here. Total income clubbed in the hands of Mr. A 1000. See illustration 8. Compute the gross total income of Mr. and Mrs. A from following information. Salary income of Mrs. A 2,30,000. Income from profession of Mr. A 3,90,000. Income of minor son B from company deposit 15,000. Income of minor daughter C from special talent 32,000. Interest from bank received by C on deposit made out of her special talent 3,000. Gift received by C on 30/9/2019 from friend Mrs. A 2,500. See here, from the point of C to F, these all are incomes of minor children. See here, salary income of Mrs. A 2,30,000 and income from profession Mr. A 3,90,000 and salary income of Mrs. A 2,30,000 and income from profession of Mr. A 3,90,000. So here the total income higher is Mr. A before including the minor children. So then include the incomes of minor children in the income of Mr. A. So clubbed in the hands of Mr. A. Whose total income is higher here? Mr. A, no? So clubbed in the hands of Mr. A. See here. Income from profession 3,90,000 and income of minor son B from company deposit 15,000 and there is an exemption under section 10 subsection 32 1500. So 13,500 and income of minor daughter. So special talent not to be clubbed. Interest from bank 3,000. So here gift of rupees 2,500 received from a non-relative is not taxable under section 56(2) subsection X being less than aggregate limit of 50,000. Okay. So next less exemption 1500. So gross total income of Mr. A 4,05,000. Okay. And gross total income of Mrs. A is 2,30,000. Okay. See here, brief working is sufficient. Detailed computation under various heads of income is not required. Okay. See MCQ number 11. Mr. Mittal has 4 minor children consisting of 3 daughters and 1 son. The annual income of all the children for the assessment year 2021 were as follows. First daughter including education scholarship received 10,000. So in this 10,000, 5,000 education qualification. So and second daughter 8,500 and third daughter suffering from disability specified under section 80U 4,500 and son 40,000. Mr. Mittal gifted 20,000 to his minor son who invested the same in the business and derived income of 20,000 which is included above. So in 40,000 20,000 also included. So here compute the amount of income earned by minor children to be clubbed in the hands of Mr. Mittal. So here in first daughter education scholarship received 5,000. So scholarship amount not to be included in the hands of Mr. Mittal. So only 5,000. So in that 5,000 there is an exemption 1,500. So remaining 3,500 to be included in Mr. Mittal. And next second daughter 8,500. So in this 8,500 deduct exemption 1,500 and remaining included in the Mr. Mittal. And third suffering from disability specified under section 80U 4,500. This amount also not included in Mr. Mittal income. Answer 40,000 by deducting 1,500 remaining amount included Mr. Mittal. So by adding all amounts after giving exemption 49,000 to be clubbed in the hands of the Mr. Mittal. Okay. See MCQ number 12. Mr. Dawal has an income from salary 3,50,000 and his minor children income are as under. Minor daughter has earned the following income. From a TV show 50,000, from interest on fixed deposit with a bank deposited by Mr. Dawal from his income 5,000. And minor son has earned the following income. From the sale of own painting 10,000, from interest on fixed deposit with a bank deposited by Mr. Dawal from his income 1,000. So compute the gross total income of Mr. Dawal. See here, income from salary of Mr. Dawal 3,50,000. In that, deduct 50,000 as standard deduction. So after deducting 50,000, income from salary of Mr. Dawal 3 lakhs. So here minor daughter earned the following incomes. From a TV show 50,000, from interest on fixed deposit with a bank 5,000. Total 55,000. In that deduct exemption 1,500. So remaining 53,500 include in 3 lakhs. And next, minor son has earned the following incomes. So here, from sale of own painting, it is based on his skill, so it should not be included in Mr. Dawal income. And next, from interest on fixed deposit with a bank by Mr. Dawal from his income 1,000. So there is a exemption 1,500 now. So from Mr. Son's income, there is no income should be included Mr. Dawal. So total gross total income of Mr. Dawal 3,53,500. Okay. See MCQ number 13. Mr. Dawal and his wife Mrs. Hetal furnished the following information. Salary income of Mrs. Hetal 4,60,000. Income of minor son B who is suffering from disability specified in section 80U 1,08,000. Income of minor daughter C from singing 86,000. Income from profession of Mr. Dawal computer 7,50,000. And cash gifted received by C on 2/10/19 from friend of Mrs. Hetal on winning of singing competition 48,000. And next, income of minor married daughter A from company deposit 30,000. Compute the total income of Mr. Dawal and Mrs. Hetal for the assessment here. See here, salary income of Mrs. Hetal 4,60,000 and see fourth one, income from profession of Mr. Dawal 7,50,000 and remaining all incomes of minor children. Okay. So here, whose total income is higher? Income of Mr. Dawal from profession 7,50,000. So here, Mrs. Hetal income is gross total income of Mrs. Hetal 4,60,000. Okay. And next, income from Mr. Dawal 7,50,000. In that, see option C, second one, income of minor son who suffers from disability specified in section 80U not to be included in income of Mr. Dawal. And next, third one also not to be included. It is professional skill. And next, cash gift received by C from friend of Mrs. Hetal on winning of singing competition. This is also not to be included. And next, income of minor married daughter. So this income should be included, but after deducting exemption 1,500. So remaining 28,500 should be included. 7,50,000 plus 28,500. So total 7,78,500 gross total income of Mr. Dawal and Mrs. Hetal is 4,60,000. Okay. See next section 64 subsection 2. So here Mr. A transfer house property to HUF. See here HUF, father Karta and mother, son, daughter members. See, every person can start HUF. How he can start? After marriage. Okay? After marriage, every person can start HUF. So here Mr. A, father, transfer house property to A's HUF. So here in this 4 people. So father, mother and son, daughter. Okay. See here, house property, partition of house property, 4 parts, father, mother and son, daughter. So here, mother earned any income from this house property partition. So that income should be clubbed in the hands of the transferor. Okay. See, Mr. B is Karta of HUF whose member derive income as a given below. Income from B's profession, Mrs. B's salary as a fashion designer, minor son D invested on fixed deposit with a bank which were gifted to him by his uncle, and minor daughter P's earnings from sports, D's winnings from lottery. Gross. Examine the tax implications in the hands of Mr. and Mrs. B. See here. Income from B's profession. So here, income of 45,000 from B's profession shall be taxable in the hands of Mr. B uncle under the head PGBP. Okay. Next, Mrs. B salary as a fashion designer. Salary of 26,000, that is 76,000 less standard deduction 50,000 shall be taxable as salaries in the hands of Mrs. B. Because here salary received as a fashion designer, B's skills, okay, that's why here taxable as salaries in the hands of Mrs. B only. And next, minor son D, interest on fixed deposit with a bank which were gifted to him by his uncle. Income from fixed deposit 10,000 arising to the minor son D shall be clubbed in the hands of the father. Mr. B has income from other sources since his income is greater than income of Mrs. B before including the income of the minor child. So here income of B is higher than income of Mrs. B. So that's why minor son income included in the hands of Mr. B. And next, minor daughter P's earnings from sports. See, income of 95,000 arising to the minor daughter P from sports shall not be included in the hands of the parent, since such income has arisen to the minor daughter on account of the activity involving application of her skills. Okay. And next, D's winning from lottery 1,95,000. Income of 1,95,000 arising to minor son D from lottery shall be included in the hands of Mr. B as income from other sources, since his income is greater than income of Mrs. B before including the income of minor child. Note, Mr. B can reduce the tax deduction at source from such lottery income while computing his net tax liability. Okay. See MCQ number 3. Where a member of HUF has converted or transferred his self-acquired property for inadequate consideration into joint family property, income arising therefrom is taxable as income of the transferor member. So option A is correct. Okay. See MCQ number 4. If the converted property is subsequently partitioned among the members of the family, the income derived from such converted property as is received by the spouse of the transferor will be taxable in the hands of the transferor member only. So option D is correct. Okay. See, there may be a cross transfer. See here, Mr. A and Mr. C both are brothers. So, Mr. A transfer 5 lakhs to Mrs. C and Mr. C transfer Mrs. A 6 lakhs. So here 5 lakhs. So Mrs. A and Mrs. C deposited in a bank at the rate of 10%, 60,000, and here 50,000. So Mr. A, Mr. C transferred gifts to Mrs. A and Mrs. C. So here under section 56 subsection 2 10. Gifts are not taxable. This section we will study in income from other sources. Okay? But the income earned, interest income earned on cross transfers to the extent of 5 lakhs will be clubbed in the hands of the Mr. A and Mr. C respectively. See here, Mrs. A income clubbed in the hands of Mr. A, and here Mrs. C income clubbed in the hands of Mr. C, but up to extended 5 lakhs only. Okay? See illustration 9. So this is on the basis of cross transfer. I already explained by using one example. So once this illustration, read by yourself. Okay? See 6th MCQ. Mr. A gifts a sum of 1 lakh to his brother's wife, Mrs. B, and Mr. B gifts a sum of 1 lakh to Mrs. A. From the sum gifted to her, Mrs. B invest in a fixed deposit. Income therefrom is 10,000. Aforesaid 10,000 will be included in the total income of Mr. B. Okay? Option D is correct. Okay friends, I covered all MCQs, questions and illustrations from this chapter. Next we will discuss another chapter. All the best. Bye.